Good afternoon and good morning, traders. I hope everyone is doing well. This is your midweek stock market update, which is part of our Equity Pulse series. So there's a few things that we are going to go through today. I'm really excited to kind of like discuss, where the stock market is potentially heading towards at the moment. And we're just going to be looking at some few other potential avenues that we can explore within the stock market. So in front of us, we've got the economic calendar in front of us. So yesterday we had a fairly positive CPI data that came from the US. So it shows that the inflation rate is reducing slowly. So that could mean that it may lead to a soft landing for the US economy. And today here in the UK, we had a bit of a surprise in terms of our CPI data. So that was, there we go. So we have a drop from 6.7 to 4.6%. So that's fairly decent in terms of the inflation drop. Now, does that mean the Fed or the Bank of England are going to be reducing interest rates anytime soon? Probably not. I wouldn't say until quarter 3 next year. We probably see a stall around here. They want to probably reduce the inflation much more than what it is at the moment. So yeah, let's see where. I believe we are in the UK reaching that 2% target. So let's see if we do get to reach that here in the United Kingdom, and the same goes for the United States. So how does this affect the stock market? And this is a very interesting question. So I've got SPY in front of me, which obviously reflects the S&P, and at the moment, in terms of Elliot wave, I have this as wave A, and this impulse from the lows of October 2022, I've labeled this as B at the moment. Now, the reason being is until we break the highs, I think I'm going to label this as B, just in case, because it doesn't look like, in terms of Elliott wave perspective, it doesn't look like a convincing impulse at the moment, although the price action is pretty strong. And simultaneously, this correction does look a little bit premature. So does it necessarily mean that it's going to unfold a zigzag? No. I do know analysts out there are very aggressive on the bearish side of the stock market, where they are counting this as wave 1, 2. Therefore, the next move down, anyone that is watching this in purely in a technical analysis point of view, the next move down without breaking the highs is expected to be very aggressive. It will be the start of the new bear market. Whereas I'm not going to jump the gun that quickly. I'm taking this wave by wave at the moment because the market is full of surprises. So I'm not going to be a type of analyst that's going to make a lot of wild calls right now. So far, I am still quite optimistic of this climbing, and there is still a possibility that this may break the highs. We just need to see how this unfolds, because the lows of October, just last month, this price action just breaking down in a 4-hour time frame does look very impulsive so far, and this move is overly extended. So the next move will help us determine, I would say, where the market is looking to go. So if we get a 3-wave move, then we know that the upside is in play, because this is a corrective move against the impulse. However, if the market completely ignores that and unfolds a 5-wave sequence, including breaking the lows, then we may be in play for a different scenario, which is supporting a bearish scenario. So not as aggressive, but it would be supporting the market on a decline for at least the next quarter or two. So taking this wave by wave is probably the most mature way at the moment. You can probably see I've even taken off the sub labels as well, because when I say I'm taking it label by that wave by wave, I really mean it, that I'm going to take this wave by wave at the moment. I would say it's probably sitting in no man's land. I mean, there's loads of different speculations, where people are saying, this is going to be a new impulse to the upside, and analysts are saying this is going to be a new bearish move to the downside. So let's see how it unfolds. So the rest of the video I'm going to be discussing is, let's go through sectors. Let's see what sectors are looking fairly good, and then we can see, you guys can then go into those sectors, look for some nice stocks, and you can find your own trade setups within those sectors. And I'm going to go through some major stocks as well, so you'll be this is going to be a very nice, fun, light-hearted update. Let's go to the energy sector. Let's see what the energy sector is doing at the moment. So I've portrayed this as a triangle. This has been going sideways since the highs of June 2022. Although we had a new price extreme, but this was in a three-wave move, which therefore means that it's a correction. So it's obviously, then in hindsight, this has proven to be a correction, because we've got wave A, B, C in a three-wave move, D in a three-wave move, and at the moment we're in wave E. Now we're just waiting for this wave E to break out. The most recent price action does look quite promising that wave E might have exhausted. So I believe also, just to kind of break down wave E, I believe wave E has unfolded as a complex correction. A, B, C for wave W, X, A, B, C. So what is a complex correction? So just to go in a little bit more detail with complex corrections, because they give you a lot of insights when the market doesn't look so clear, and if you are unfolding a complex correction, they're very, very helpful to recognize early on. So imagine this is an impulse, and then we got a simple zigzag, and then your hopes are that the market is going to continue to climb to the upside. But then what if the market unfolds another zigzag without breaking this key level? Or if it does break it, it gets rejected, just like here. And then the market is retracing, which what you believe is 1, 2, 3, and 4, but it goes into wave 1's territory, just like it did here. Right, 1, 2, 3. Then I was thinking we're going to get 4, but we didn't. And then instead, you get another A, B, and C. So it is, in hindsight, it unfolds in a 3, 3, 3. And this is a double zigzag, what I've just drawn, and what wave E has unfolded at. A simple zigzag is in a 5, 3, 5. A as in unfolds as a 5-wave sequence, 3 wave sequences in wave B, and wave C unfolds in a 5-wave sequence. Whereas a double zigzag unfolds in a 3, 3, 3, which 2 zigzags are joined by an X connector. This is the connector here, right? So we've got the 7 swing structure, 1, 2, 3, 4, 5, 6, 7. Now I believe, according to the Elliot wave, I'm just looking at the momentum, and I'm not getting much of like the strong, crazy divergences. Maybe in the 4-hour time frame, I can see that it is, the RSI is showing that price is running out of steam within this bearish sequence, right, from the highs of September. The MACD does also show some form of divergence, but no turnaround as of yet. So it just shows that it's running out of steam, but nothing so promising in terms of the divergence. But in terms of like the wave count, let's see how this unfolds. If I see a 5-wave up with a 3-wave correction, I would say the energy sector may be ready to break out of this large triangle. So the energy sector looks fairly good at the moment, but it is still very much early days. Let's have a look at another sector. Healthcare sector. So this is the healthcare sector, something similar to the energy sector. So obviously this is more of a defense stock, so they don't have like a drastic drop when the economy is doing bad. They usually either go sideways or they do fairly well. So we've got the healthcare sector at the moment, which is also unfolding a triangle, but this triangle looks slightly more premature, because it seems like, if this is unfolding a triangle, we're in wave A, B, C, and currently in wave D. So let's do the retracement for wave B. Wave D could come around that $134 up to $137 mark. So in terms of like lower time frame, lower degrees, we may have another push to the upside into wave E prior to the wave E correction. We've got an invalidation level sitting at 12260. So do you trade this triangle? Yes and no. So the way I see it is that within the sector, and this is the educational focus on the health sector that I wanted to bring here. It's like within the sector, I mean, if something is unfolding, for example, we've got another push up. And let's have a look at this price action. This price action took 27th of October all the way to the 8th. So that is, I think, yeah, just over a week, just under 2 weeks, right? So that's a swing trade. So I could expect, this, if this is an A, B, and C, I could be expecting this around the same sort of time. This started unfolding on the 10th of November. It's the 15th today. So yeah, another week and a half maybe. I mean, I would give it a month that we could reach that sort of level that wave D has exhausted. So going back to it depends on what kind of trader you are. If you're a swing trader, which don't mind holding positions for a few days to a week and a half, 2 weeks, maybe you could catch something short term, or otherwise, someone a bit more conservative could wait for that wave D to complete E, and then you can find some stocks within this sector. So like, for example, let's have a look at Johnson & Johnson. That's one of the biggest holders here for the energy sector right now. Daily time frame, I haven't labeled this at the moment because I mean, it's a bit obvious that we're on an uptrend and we're currently unfolding some form of a correction. It's in shape of a zigzag. What is it specifically? Hard to tell because this price action moved in a three-wave move. Then we had another three-wave move to the upside. So, it makes me think, are we unfolding? I mean, is this another ABC? So you have to sit down and kind of count the sub-waves. And potentially we could get away with this being an ABC if we are counting this as a complex correction. So let me label this for anyone who isn't used to the Elliot wave theory. So in terms of technical analysis, it's a retracement. But then what Elliot wave helps us to do is breaks down those individual squiggles on the line and gives it context, gives it life, and gives it a meaning. Okay, so going back to what we discussed in the energy sector for complex correction, A, B, C into the X connector, and now for wave I, potentially we could be an A, B, another C if we have another push down. Right, so no divergences at the moment. The only reason why I like it because it's respecting the lower bound of this descending channel. So that's kind of like your back to basic technical analysis. So yeah, let's see how this goes. And obviously you want to do full due diligence like I do. You want to be breaking down various different fundamental factors as well of this company and see how they are performing, how their earnings etc. being, and see fundamentally if there's any other catalyst that could be pushing this stock up. But in terms of charting, this looks like a three-wave move, and then we just need for this wave to exhaust to the point that we can expect a rotation, a turnaround. Right, so that's the health sector done at the moment. So let's have a look at tech. Now, this is exciting. I left the best to last because tech just formed a new high. The sector has formed a fresh new high, but it's looking a bit interesting because now I'm counting this from the lows of October, right? So we got 1, 2, and then 1, 2 of this wave 3. Now let's count this bracket as wave 3. 1, 2, 1, 2, 3, 4, 5, 3, 4, 5. So that looks like a fairly textbook wave 3, right? And this whole wave 3 in bold looks fairly good as well. So this makes me think that, in terms of discount, are we in a 1, 2, 3, which I'm not sure where it's going to end, but the move is obviously gone beyond the highs. So, it is up to the price action, how far it wants to extend. The market does move at random, but if this wave 5 in, parentheses wave 5, or in the UK we call it brackets, completes, then we may be in for another correction all the way down to this 160. I mean, if we take the rules of the guidelines where wave 4 goes as far as wave 4 in one lesser degree. So it's really interesting to see how tech plays out. I think there's some more room to the upside, but I'm not sure how deep will this go. I mean, let's have a look at Apple, for example. Like, Apple's kind of reflecting the same thing at the moment. So I went through this in our masterclass, group masterclass recently, breaking down Apple and, you know, this various different degrees of trend. And, you know, this, from my chart on Apple, it looks like we might be in play for a bigger wave 5, because we might be in wave 1, 2, massive 3, 4, 5 in play. So yeah, I'm really keen to see how this specifically plays out, and how it correlates really closely to the tech sector as well. Let's look at some other tech stocks and see how they are performing. So yeah, same with Microsoft. You know, Microsoft's unfolding a 5-wave sequence into this wave 5 of 3. After that, could be in for another wave 4, which, you know, I'm not sure how long that's going to take. That could take at least about 2 quarters. So just going to wait and see when this price action from the lows of September here, for example, exhausts. So that's it at the moment. If you guys do have any questions regarding this analysis, please do let me know. And if you want me to give you guys, you know, cover any sectors next week, I'll see if I can cover them. I am usually quite sector agnostic. I'm not like married to one sector. I like to kind of like have a good common understanding of all sectors as much as I can anyway. So yeah, just let me know what sectors you guys want me to like have a look at closely, and then yeah, hopefully more than happy to cover that next week. So yeah, take care everyone. Goodbye.